Over the last 6 months, I've been completely addicted to copy trading and I've made a lot of money doing it. I've learned a lot. I was a complete beginner when I started this. I had no idea what I was doing. And now I'm making well over like at least $500 a day minimum on my account. And I want to take you through everything that I know. I want to show you how you can do this as well. And you don't need to know anything about trading or anything like that. Because what we're doing is we're actually copying other people's trade signals. If you don't know what I'm talking about, I'll explain all of that in this completely free video. Now, I've quickly thrown this video together because I do have to go out soon, but I want to go through and take you through everything that you need to know, but I want to do it in a way that it's not complicated, but it's easy to understand if you're a complete beginner. So let's get into this. And first of all, I'll just show you some results from my account here. So this is daily. So 1, 2, 3, 4, 5 days here. And on this day, I did $760,000 US. This day, 2,800. That was a good day. This day, 650. This day, 2,400. Another good day. This day, 1,065. Now, I haven't had any red days yet. However, I have had losses, but I've made them back on the day. Like, for example, this trade here lost $100. This trade here lost $100, but it still came out $1,000. I think one of these days, or there was another one where I made a few $100s, but I was actually down 1,000, so I made back like 1,300 or something like that. But I've always come out positive every single day. So let me explain to you exactly what this is, how to get started and everything, because right now it's literally like printing money. I'm not kidding. It's insane how crazy this is. I thought this stuff doesn't work, but it does apparently. So first of all, what is copy trading? Copy trading is when you're in Telegram groups and you're copying other people's signals on something like the gold price, silver price, Bitcoin, or something like that. Now, why would you want to do this? First of all, most of these people who are doing these signals, they are experts in their field. So they're experts at analyzing gold, pricing, analyzing all that sort of stuff. Like most of it is just supply and demand and the price. But these guys are the experts. It's taken them years to learn this stuff. I don't want to learn it because I'm lazy and I just can't be bothered. So I copy these people's signals. That's what I do to make my money right now. And so, for example, if we take this guy, he did a signal here, and he had the price to buy in, all the take profits and everything we'll talk about in a second. And you can see that there's profit here. This is his profit from the trade, okay? And he posts all of this in his group. This is just one of the groups I'm in. There's multiple groups. So that's what copy trading is. But it's not as simple as just copying people's trades, especially when you're brand new. There's a bit of stuff to understand. It took me around about 2 months to fully understand this stuff before I started to make good money with this. So let's dive into the details. But that's what copy trading is essentially you're copying other people's trades. Now, if you don't know what I mean by trades, I'm talking about trading on the foreign exchange. And we will talk about that in a second. But does this make money? Now, I'm going to tell you this does make money. So these are some of the groups I'm in, and this is the money that some of them are making. This guy made $17,000. This guy made $13,000. These are the guys that posted the signals. This one here is actually this guy's here. However, I saw this guy right here. I'm not kidding you. It's in his Telegram somewhere. If I scroll up, he made $1 million in one trade. Insane. So yeah, this stuff does actually work. Now, there's a few reasons why it might not work for a lot of people, and we'll get into that a little bit later on in this video, because some people might overtrade and things like that, but we'll talk about all that stuff at the end. So how do you get started? So what you're doing is you're trading on the foreign exchange, Forex. And you can trade like the US the US 30. You can trade Bitcoin, anything like USD Euros, USD NZD, USD AUD, etc. You want to pick one thing to trade, and the best thing to trade, in my opinion, is gold. XAU USD, gold to the US dollar. This is what I trade, and this is what most people trade. So this is what I would recommend you do. If you're getting started, you can trade this 5 days a week. It's closed on the weekends. So we're going to focus this tutorial on the gold price. The first stage to this is just going to be learning, because if you have no idea what any of this is, there's a few things you need to learn about first before you actually start trading with real money. So the first thing you want to do is you want to find some Telegram groups to join. I'm going to leave a couple below, maybe 3 or 4 of the best ones that I'm in. And how these Telegram groups work is very simple. They'll have 2 groups. They'll have a free group, which they will put in signals from their paid group, but they might put in like 2 signals a day. Okay? 2 free signals. So if you want, you can do this for completely free. You don't even have to join their VIP groups. But they also have VIP groups. Now, in the VIP groups, usually they're going to do like maybe 3 to 5 signals a day. They're not going to post every single signal in the free group. Now, how do you get into the VIP groups? Usually it's paid. I think this one's like $100 or $200 to get into this one. Or you sign up to a broker under them, and they're an affiliate, and they make money from your trades. So they get a bit of a kickback. So that's two ways that you can do it. So there's usually a free group, and there's usually a paid group. However, you can just stick in the free groups if you like. They work just fine. I'm in a few free groups, and I do copy some of their signals. The next step is you need to download an app called Meta Trader 4 or 5. I use 4, or you can use 5 if you like, but 4 is pretty good. And very simple. There's a few things you need to understand here. On Meta Trader, you're going to have your currencies, etc., commodities that you can trade, and we're going to be trading X, AU, USD. There's a chart you can watch if you like on the price, and it'll have all of your signals, like when you do buy orders and all that stuff. It's going to have a page with your balance, and then it's going to have your trade history. For this month, I did $7,000. And then there's also going to be a settings page with your brokerage account connected to it. That's Meta Trader 4. That's pretty much all the pages that you need to know about. And then, there's a page where you can put in orders, which I'll show in a second. I forgot to actually put that up. The next thing is you need to get a brokerage account. However, I wouldn't recommend getting one straight away. I'll explain to you why. However, this is the brokerage account that I use right here. It's called vantagemarkets.com. And what you do is you connect this account to Meta Trader 4 in the settings here, and that's what you use to trade. So you essentially upload your money to so you register to vantage.com or whatever, and you go ahead and you put in your money, you deposit your money, and you're going to connect it, and then you can deposit more, or you can withdraw your earnings from this website. This is called a broker, and we're using leverage trading. So there is a large risk in this stuff, but if you do it right, you can make quite a lot of money. However, I wouldn't recommend signing up to a brokerage straight away, because what happens is in some of these groups that you're going to be joining, they require you to join one of their brokers that they recommend so you can get into the group. Okay, so just keep that in mind. I would recommend joining groups first. If you're going to do the free trades that people do, then go ahead and just sign up for something like Vantage, because it doesn't really matter what broker you use. But if you do plan to join the VIP ones, some of them require you to use the broker that they recommend. Now, the next step that I recommend you do is once you join these Telegram groups, spend around about a month, or maybe like 2 weeks to a month, just studying the groups, watching them, seeing their results, because a lot of them will post results on like their daily performances, and just see if the groups are right for you. One of the biggest mistakes I did is I started trading right away, and I had no idea if their signals were going to be good or not. And there's a few groups that were not very good for me, and I left those groups. So just watch them and see what their results are like over a week or 2. And then if you want to, you can start trading with a demo account. You don't actually need to use your own money to do this if you want to start practicing and learning. Now, the next step is you need to understand things like stop losses and take profits. So this is the page on Meta Trader 4 where you can actually put in your orders. Now, this is all on your phone, by the way. I do this while watching TV, while playing video games. Even when I'm driving, if I get a notification, I'll pull over and I'll do a trade on the side of the road. So you can do this all on your phone. So first of all, let's just take baby steps real quick. We need to understand what a stop loss is, an SL, and a take profit, TP. A stop loss, so here's a signal here. A stop loss is the point where your trades are going to close at a loss and you're going to lose money. This is called risk management. So what you do is you put in what is called a stop loss. So if it hits that stop loss and goes the wrong way, the way that you don't want it to go, you don't lose a huge amount of money because you have a stop loss in place and you just cut your losses and you go on to the next trade. A stop loss is there to protect your capital in your account so you don't lose a huge amount of money. A take profit or a TP, you can have TP1, TP2, TP3, TP4, 5, 6, 7, however many you like, is where your trades close at a profit, okay? So that's what a stop loss is and a take profit is. A stop loss is bad. We don't want it to hit the stop loss, but sometimes it does. TPs, take profits, these are good. This is where we actually make our money. And you can see inside the order page here, whether I sell or buy, I can put in my stop loss. So I will just copy this stop loss, which is 2595, and then I can put in my take profit. And I will do separate orders for each one. So TP1, I'll put 2603, then I'll do another one, and then etc. Now this is buying at market execution, which means I'll be buying or selling at the market right then and there. Or you can do what is called a limit. So for example, this is a buy trade here. This guy has got a buy trade and this is a zone. So I might want to do 3 trades at 2601.5. That's my entry point. I might not have hit that entry point yet. So I could go ahead and put buy limit and I can do 3 trades at 2601.5 and these will be on the market. And then when it hits that entry price, then my trade will go live. And if it doesn't hit that entry price, I can just close those trades off. They're not going to lose or make me any money because it hasn't actually gone live on the market yet. They're just sitting there waiting to go live. But sometimes these copy trades come in a little bit late, so you've got to be quite quick and you just do a market execution, which is just put it in, done. You might not get it for the exact same price. You might change a little bit, but you get it pretty close. The next thing we need to understand is pips and lot sizes. So once you understand these 2 things, you're off to a pretty good start. This is pretty much all you need to know with copy trading is stop losses, take profits, and then pips and lot sizes, okay? So let's get into this first, and hopefully you understand how this, hopefully this makes sense to you. So first of all, we need to talk about what is a lot size. So if you actually look at this here, this order form here, you'll see this thing that says 0.1, okay? 0.10. I can change this to 0.2, 0.3, 157, or I can change it to 0.01 if I like, which is the lowest. This is called a lot size. The higher it is, the more you could make or lose. Now, let me kind of break this down for you, if I can, in the easiest terms possible. So, this is what a lot size is. Now, I'm going to base this on 10 pips. We'll talk about pips in the next slide, but we're going to base this on, let's say we purchased at 2,600 and the price and our first take profit is 2,601. That means that we would have moved 10 pips. Okay, so if our lot size was 0.01, we would have made $1. If our lot size was 0.1, we would have made $10. Okay. If our lot size was 0.2, we would have made $20. If our lot size was 0.25, we would have made $25. If our lot size was 1, we would have made $100. Okay? That's what that means. So every time the price, for example, here moves 1 pip, we make 10 cents or lose 10 cents. This one here, we make or lose $1. This one here, we make or lose $2. This one here, we make or lose $2.50. This one here, we make or lose $10. That's how it kind of works. So if we actually go back to my results real quick up here, you'll see that this is not very big, but let's just get rid of these. Let's take this here, expand it. You'll see that I had lot sizes of 0.5, 0.4, 0.5, 0.7. Yeah, so those are the lot sizes that I was doing on that particular account. Now, the next thing we need to understand, and we're going to get into using a calculator soon, is what is called pips. So pips is the movement in the price. So for example, if we take this trade right here, so if if we hit our take profit 1, which is 2603, and we got in at 2601.5, we would lock in 15 pips. So if we had a lot size of 0.1, that means we would have locked in, so if we had 0.1, we would have locked in $15 from that one order that we had based on this, okay? So here's some lot sizes here. Now, keep in mind, if we had have hit stop loss, we would have at 0.1, which the stop loss is 65 pips away, we would have lost $65, okay? However, this guy here has a win rate of like 95%, so you're usually always going to make money with his trades. So that's what pips are. Every time the number goes up, like, so you see here how like there's these decimals, 0.16. Each 10 of those is a pip, 1 pip. But basically this is how it works. 206 to 201 is 10 pips. And then we use lot sizes to calculate how much we're going to make. But let me kind of try to explain it in a better way. We're going to use what is called a lot calculator or risk calculator. Okay. All right, guys, actually, just before we get into that, I just want to show you like that I'm actually in this. And then all of these groups, these people are posting their trades every single day. So I actually do this every single day, just so you know. Yeah, these are the groups I'm in and they all make good profits. So what I've done is you first need to figure out, now you're not going to get this exact, in fact, I don't even really check this anymore, but you want to risk a certain percentage of your capital. So let's just say you have a $500 balance on your account and you want to risk around about 3%. I usually risk around 5 to 10, sometimes more, but you want to risk around about 3%. What you want to do is you want to take the entry price that you enter in, which is 2601.5 in this case, or 2598. Now, the closer you are to the stop loss, the less risk you're taking. But I've put in 2601.5 and then the stop loss of 2595. I've put that into this calculator here, and it's told me that if I have an account balance of 500 and I want to risk 3%, my lot size is going to be 0.0231. We'll just say 0.02. So that means that my lot size here would be 0.02. Okay. However, that we don't want to just do one lot. There's a reason why. So if we actually go back to here, you'll see that he has multiple prices, which is called zones. We'll talk about those in a second. But you'll see that this price is closer to 2595, the stop loss. So if we purchased it at this price, our risk would be a lot lower. However, it might not hit this price. It might hit this price and then go to our stop loss, our take profits. So what I do is I usually buy a little bit here and then I'll buy more inside this zone. Okay. So essentially we're going to do multiple lots, and you'll see here why I have multiple lots. Like this red here is one trade, but multiple lots, multiple trades on multiple lots, because I'm buying in at different prices. You'll see here, I bought in at 2662. I sold, sorry, and then 0.5, and then 2662.3, 2662.1, 2662.9, 2663.5. I'm buying in at different prices, and then I've also got different take profit levels. So this is what I would recommend you do. Go ahead and put in your risk. We can change this to 4, 5, or whatever. 4, sorry, and then you just divide this number here on how many open trades you want to have. So, and now you're not going to be able to check this every single time you're going to do a trade because some of the trades come up quick, but you just want to get a general idea. So for example, let's say I have a lot size. So we did 3% before. I want to risk 3% of my capital, 3% of 500. That's what I want to risk, $15, 0.0231. So what I did is I divide 0.031 into 3. I divide it by 3, so I want to have 3 trades. Okay, that gives me a number of 0.079. Now that's below the 0.1, but it's close. So we're going to do 3 trades at 0.1. Now our risk gives me a little bit more. It's going to be like 3.2, 3.3%. but we're going to do 3 trades at 0.01. And that means that we have a little bit more flexibility when it comes to the trade. We can close 2 off early if we want. We can close 1 off early if we're in the profit. We can leave the other 2 there, etc. It just gives us much more flexibility when we're doing trades. And that's why I have, like in this one, I had like whatever, 10 trades open, because I can close 3 off if they're in profit, and then I can set the other ones to break even stop losses if I want. It's just a way of managing risk much better, rather than doing one single trade at 0.231. Now, if you have a really small account, one trade might be the only way you can do it, but you want to have at least 500 plus to get started with this. But that's essentially what you want to do. Split it into different trades at smaller lot sizes so you have more control over your trades. And then obviously you're going to be doing multiple stop losses as well, take profits as well. So I don't always do all the take profits. I might just do take profit 1 and 2. Depends. You do want to do 3, 4, 5, but it just depends. Sometimes if you don't want to risk a lot of money, you might not be able to do the other ones. Now, I want to talk about what is called buying and selling zones. Okay, so let's go back to this chart here. Now this is just off the top of my head. Let's say, for example, this is a 1 minute chart here. Let's say we have a zone here, 2622, 2624. Let's say that there's a copy trade that's come up, and that's what they're saying to buy or to whatever selling. So let's just say that that they think this is going to sell off. This is the range. So if we go back to here, this is the range he's telling us to buy gold in. Okay, this is the range. Obviously, if it's closer to the stop loss, it's better for us, etc. We just got rid of that thing. So let's just say we have a range here. We want to we want to sell within this range. Now we're going to have a stop loss somewhere. It could be here. Okay, this is going to be our stop loss because this would be a sell. We're going to have take profits down here. Now, if we bought up here, we're going to be closer to the stop loss, so it's less risk. If we buy down here, we're going to be further away from the stop loss, so there's more risk. However, the price might never go up to the top of this zone. It's the same with here. The price might never it might never go back down to, well, not never, but it might not go back down to 2595, or might not get there within this trade. So what I do with the zones is I'll buy a couple here in this zone here and the one here, and then if it goes up, I will layer up. Okay, I'll do what is called layering. I'll put an order in here, 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 here. I'll do what's called layering, and then when it goes down, I'll make a bunch of profit. And that's why in here, if you look at some of these results here, or some of these trades, he says enter slowly, layer with proper money management, because you're layering in these zones. Okay, that's the supply and demand zones. Now, the next thing I want to talk about is risk management. And this is quite important. This is going to make or break your trading. Don't get greedy. Don't get FOMO. Don't do every single trade that pops up, and do what is called risk management. What does this mean? Let's say we have a trade going and we purchase in at 2601 or 2600, 2699, whatever. Let's say the trade's going real well and we hit TP1, 2603. Okay, we're in it. We've made some profit. Let's say we have 2 trades left. Okay. What you want to do with those 2 trades is you want to change, because you can change the trades throughout the trade. You want to change the stop loss to whatever you purchased in at. So let's just say 2601.5 on the other remaining trades that are open. The reason why is because a trade can always reverse, and we've already made profits. So let's just say we have 2 more trades left. If those trades go back up to 2601.5 and we make $0 on those trades and they close out at break even, does not matter, because we've already made profit on the other trade that hit TP1. Now this also depends on your risk tolerance. So for me, I'll move most of mine to break even, and I might have 1 or 2 that are still open at the other stop loss. And if it hits that stop loss, it doesn't really matter to me because I can afford to have a much bigger risk appetite than a lot of people. So I'm not too worried about it. But if you have a small account, you don't have a lot of money, you want to be doing risk management. But you're going to learn all of this inside these groups that you're going to join. So that's really it, guys. What I would recommend you do is go into these groups, watch and learn what they're doing, and watch the trades, watch the results and all of that sort of stuff. And you can go ahead and make money copy trading. It's absolutely insane. All right, don't forget to subscribe, tap the notification bell, and I'll actually do some more videos of me live trading soon, and you can see how it all works. I'll see you in the next video.